All right, there we go. Now we're recording again, I assume. Okay. I think yesterday I tried to record and it didn't, or maybe I messed up something. Anyway, okay. So quickly, we're just going over the Robinhood, up about 250% since inception a month and a half ago, coming up on 2 months. So that's not bad. And on Top Step, I just wanted to go over all the accounts real quick. Top Step, 149,591, sorry, 149,591. So down about like $400 from the 150. This weekend, I did a bunch of remodeling of my algos on Top Step, and I'm running a NASDAQ Dow and S&P 500 algo, believe it or not. And also, believe it or not, the S&P is on a 1-minute chart. So good times there. Off to Citi. Citi is back up to 20,550. I'm up about 2,300 in open profits at the moment. Long all of these positions on the screen, or I'm in all of these positions on screen. Looks like I'm about to get stopped out on Euro Franc, though. I think I put my stop way lower because I'm just kind of waiting out the clock. So it got filled. And so I'm 23 out of 30 trading days. And so one thing I realized is that I can definitely day trade in that account and do just fine. And that'll give me the 30 minimum trades. And really it's just a simple swing, not swing, but a simple long and then exiting, and it's just trading at a pretty low risk size because there's no real I'm already in positions and I'm continuing to take new positions. I'm continuing to do everything there. It's just now I'm adding in the day trading element to it for the remaining of the next week or so that I hit my trading time and also continue to increase the profitability. So this algo is a 10-minute algo. I could do 30 or whatever, 60. It's a very simple algorithm, and I'm happy to go over it if you guys want to look at it. And kind of, there's some things we can do to it. If you're so inclined, I'd be happy to go over it and share it. Okay, Simon, you got it. I pasted the code in the code warehouse. So really simple. And I believe if you're, let's see. I know that there's a way that you can auto connect your trading view to MT4. Yeah, I know there's a way to do it. And then let's see. But if not, the code is very, very simple, and somebody could generate it for TradeStation or for, for TradeStation and for MT4. There's, I forgot the tool that we bought. Grant, do you remember the name of that no code tool that you can write up you write your own algorithm? The MACD isn't a staple. Don't worry. I'll go over it, Tyler. What was I know I purchased it.
EA Builder.
There it is. All right, I just got it. Thanks. Yeah, so there's this tool called EA Builder, and maybe I'll just code it up in EA Builder so that we can throw it on MT4. But it's thanks, Grant, by the way. So Tyler, to answer your question, and Chris M figured this out last night when he looked at the code, and he said, wait, so you're telling me that this does the exact opposite of what everybody thinks the MACD does? Yes. So when you have a MACD cross up, it goes short. And when you have a MACD cross down, it goes long. So it's literally the opposite of what everybody thinks the MACD is there for. So Tyler, if you follow me, know my work, you understand that when I have a trading strategy, it's always based on price action, and it's based on playing the other players. It's less about trying to be right and calling the whatever, like this David Tepper thing. Like, I've never seen something so whatever, so second most overvalued stock market he's ever seen. So I don't care about that stuff. I want to make money here. So what I'm looking to do is okay, what is everybody probably doing? Well, the first thing, if they're getting into trading, they're probably going out and they're probably learning MACD and stochastics and RSI and, the Fibonacci's, all the out of the box things that most traders learn. And if you're building in order to make money, you're probably going to take advantage of those unskilled traders. Well, not probably. I'm going to build my strategies around taking advantage of unskilled traders because they don't know how to play the game. It's just like if you were playing basketball, you would exploit the weak player on the team, right? This is what they did to Shaquille O'Neal. They would always foul him. Oh, that's a nice trade. It's making up for the Euro franc going down, but yeah, that's up $150. We should get, I think it's going to cover here in a second too, so I'll have to close out of the trade, but yep. Thanks. All right. So basically took this trade short, covered here. Let's have a look at the results. I don't know why we're back to something to, okay. Just needed a position size. So this strategy just does the opposite of what MACD tells you to do. So, new traders, basically, what we're doing here is we're just exploiting newer traders. So we're trading on the 5-minute, I'm sorry, the 10-minute. And, if anybody's trading on the 10-minute Euro, probably a day trader, right? And there's a high likelihood that they're also low skill traders. So being able to take money from them, it's your right as a trader. So basically, I put together this simple algorithm, and takes the 10. So the MACD basically is 3 inputs. I think it's 12, 26, and 9. I kind of, in my mind, I'm thinking to myself, why 12? I guess 5 on 5-minute candles, 12 represents an hour. I don't know. I don't understand why they would do 12, 26, and 9, and why 10 and 20 and 9 didn't work. I don't know. I just evened it out, so it just looked even easier instead of just, it kind of seems 12, 26, and 9 is kind of an arbitrary setting that has just been established over time. I'm sure there's research on it that probably is no longer useful. But anyway, so I just changed it from 12, 26, 9. I could probably change this to 10. And then the strategy, basically, you have your moving average, your MACD, and you have your, so that's, the MACD is your fast, so the 12, or I'm sorry, the 10, minus the slow, the EMA of the 10 minus the EMA of the 12 or 20. And then it's the average of the EMA of MACD length, which would be the average of the 9. Or I'm sorry, it's the the exponential average of the 9. And then what's the difference between the MACD and the AMACD? So if the delta, if the crossover basically goes, if it's crossing up, I got to change that to Z43. So if the MACD, and we'll just pull it up here so everybody can see, maybe. I thought we could. No, I'm going to have to take my beloved SQN off this thing. Okay. So when the MACD crosses down here, this signals a long. And when it crosses up, it signals a short. And that traditionally everybody sees, oh, the MACD just curved up. That's a buy. And it's really, this is the importance of indicators is they're not really all that great. Being able to exploit people using the advantage that you have, the people that are using the indicators, you can exploit them. And that's what we're doing here. We're just basically getting where everybody's going to be buying over here. You're going to have an artificial buy and they're going to move it in another direction. So we're just taking advantage of it. Let's see. Let's have geez. I should put in. And so basically if it's crossover, it goes short. If it's cross under, it goes long. So the opposite. No leverage, no leverage. So here's just some code for, I haven't really implemented it, but take profits, stop loss, trailing stops, close, I think 100% is the CQ, but that's not, none of this is coded into it. It's just kind of there at the moment. So these are all available for me to add to it later, but if anybody wants to take it and run with it, it's your code. It's 10 lines of code, and that's the easiest average type of, for me, that's the easiest type of way to, oh yeah, okay. It's the easiest type of way to set it up. Okay, so as you can see, this one called for a long. Let me give you the performance here on it. So this strategy has a Sharpe ratio of 1.34, rare for me. Profit factor of 1.19, that's about average for me. And percent profitable, so 69% win rate. Average trade, $66. Average winning trade, $578. Average losing trade, $1105. And so that's, that's pretty much it. It's a very simple strategy. And if you are looking, I mean, we could definitely, I could ask one of you to put together the MT4 code if you want, or I'll get to it myself eventually. I had a little sprint this weekend where I was able to do a bunch of coding. So I was able to update my algos and then write this one up. So yeah, easy enough. You guys have any questions on it? Yeah, it's definitely, you're up, Frank. Okay, these are our currency positions. If you guys need to see anything here, it's just high bases and just keeping adding to them. Euro franc's taking a little bit of a drawdown. My stop's down 109. Yeah, like right in there. That's about right. So that made this position extremely small because it is the Euro franc and is a little wacky. But as Mike questioned last night, Chris trading a franc pair. The franc pairs work phenomenally in VBO2s and in high base. So good trending patterns when they trend. So that's why the royal me. That's why I'm trading Euro franc on that one. All right, so let's have a look at our crypto portfolio. Une putting in a good move the other day. We had a little bit of an up move yesterday in BAT that's pulling back a bit, and now the KSM and DOT are moving. Also, so there's life starting to get bled back into the or brought back into the DeFi space, and our core. Whoa, how did that happen? That's weird. Our core crypto holdings are Litecoin, Bitcoin, DOT, and Ethereum. Ethereum is about break even today. So Ethereum's not really doing anything, but DOT up 3%, Litecoin up 4%, Bitcoin up 3%. And then of course, back into the KSM up almost 10% today. So portfolio is starting to move. All right, let's have a look at the deep out of the monies. We got the Dow moving nice today. I think the Dow is still outperforming everybody, and I'm happy to be in this one. We got those diamond calls yesterday. I got 645s on the fill, currently trading at 665 by 690. So they're calling it 675. So about 30 cents in. These are the January 2022's 360 calls on diamonds. And if you saw the setup in there, I'm willing to, I may write up, start doing a write-up on these deep out of the monies, exclusive to lab members. So, you'll get an email with them in there with a little bit more research on them. But pretty much that's this one. I think Dow's still leading. So, you compare Dow to NASDAQ. This is what, even though NASDAQ is up percentage-wise massively today, it's still down in that other range where it's been. So I got in on Sunday night. This is a good troll bottom type scenario. Would expect to move back up into the top of the range and continue the trending going, but I've moved to the Dow as my new vehicle of choice. I'm gonna trade this like I did the NASDAQ this past year. This is going to be my until otherwise noted. This is going to be my main business. Deutsche Bank, good gap up yesterday and back into the high base regime. I'll just kind of contextualize it here a little bit. Let me get what did I do? the Dow. The reason I went there. So first things first. And then we got to go monthly. So one thing I was looking at on the Dow was the value to basically, this is the 1999 top at 2.48. This is the ratio of Dow Industrial to M2 money, velocity of money. And so when we compare all of them out there, this one is the most well priced, and also it's more important that starts out. Let me just do it that way. So this is Indy X/M2. So this is the .com bubble, and this is the NASDAQ. So a long ways to go on NASDAQ compared to where it was in 2000. So 0.7 to 0.9, still pretty good. And the S&P still 0.32, 0.20, still pretty decent. But the Dow pretty much was the best one here. And I mean, even just getting back to the COVID highs, there's still a good distance to catch up. And that's not really like a reason to choose one thing or another just because it's cheap, right? We've seen how bad of a trade that's been for everybody not long NASDAQ up till now. So that was my first reason to take a look at this was, okay, this one's lower valued. Let me see what I can find. What other reasons to do it. Okay, the next thing I did, actually, we did it through the diamonds. I think we can go out a little further. Now, remember, I'm trading this 6 months to 2 years out. I'm not looking for a week out. Like, we got really lucky with the SKTs last week. We've done pretty good with the XLEs. But they're not nearly as, the XLE is a month in, almost 2 months into the trade. We've got probably 6 more months to go on that one. This one, we've got about 10 months to go. And there's a lot that can be accomplished in 10 months. So one thing that I looked at, the next thing I looked at on the indexes is look at the performance, how this is looking this week. Like, this is a weekly chart. And I bring it up into context because there's our first high base. We're breaking out of the high base up here. All right. Kind of nice, kind of interesting. Now, on top of that, I like to look at my measured moves, right? Low 182. Okay, so 190 or 290 to 182. Thank God, 108. Sorry, I said thank God because I was just looking at the day. It's Tuesday. I was thinking, oh God, it's not Wednesday already, right? 398. So the measure move target on the Dow, on diamonds, is from the high here down to low there. That gives us 108 points between the two. Add the 108 to the top if we're back into the trend, and that gives me a price target of 398. Okay, so that's next into my analysis. I've added that. And then, I also want to go in and just kind of, be more realistic, because I've said numerous times, what's low here? 228. I've said numerous times that you can almost just delete this off your chart and you can see it moving just as it has been doing, and fine. If you just suspend reality and take those things out of your mind, you know, you're less caught up in this crap, and you're more caught up in everything else. So it's a trick to play on your own mind there. So the next one, 62 gives us 352. What was the 62? Oh, I see him like 290. Wife just ordered something. So the next measure move is 352. So if we say, okay, what's a conservative estimate of what we could get to? The measured move would be 30 points higher from here at 352. Best case scenario, it hits its real measured move, 398. Okay, so that's interesting. There's a lot of move there. Now, the next thing, remember that, have that in your mind. Now let's go look at the different, I'll just use this stock. So compare the Dow chart to this chart. This looks certainly much more bullish, right? Like it's been just, a rocket ship since COVID bottom, and, we've caught it all, and I'm not giving up on it. I added Sunday, so I'm continuing to hold on to this trade and continuing to kind of profit out it. But this one isn't looking as bullish as that. That's a new all-time high. This is not, and it has been doing plenty of new all-time highs, and we've taken advantage of all of those. But this is now less. This looks less bullish to me than the Dow. The Dow breaking out after a week last week means that a lot of money was reallocated to the Dow, and everybody was talking about it. Dan asked me about the rotation, and everybody's been talking about it. And yeah, I'm slow. It takes me a while. Eventually I'll look at things and get it figured out. So Dan was ahead of the game on that one. So that's what that one looks like. That's the NASDAQ. So let's look at the S&P. S&P is holding up better for sure. It's up in this range, but it still hasn't broken out to new all-time highs. Okay. Still probably a good trade in there. And then let's have a look at Russell. Stronger than NASDAQ in, that sense. Weaker. Let's get it. But see, we've done 170 down to 95. 75, right? Is that right? Yeah. 70. So 170, 240. So the measured move price target is like right here on the Russell. 339, 218. So 120 plus 460. So there is potential. As we can see, the S&P looks pretty good. There's still potential to 460. Is that right? 340 plus, 460. So there is potential on the S&P to hit the 460 price target. That's nice as well. But this one has the most. And if we were to look at, let's take a look at the S&P again. That's the 260 is the most realistic, or the biggest move that we would get. 270 from 340 is 70 points. 340 is 410. So on the conservative estimate, 410 would be the price target. If we suspended belief here, we just took it back to here. The conservative estimate would be 410, and we're almost right there. So looking for a deep out of the money on that is not going to be there. Okay, so I did those things, and that gave me the math to say, or the whatever, somewhat the math to determine, okay, let's get long Dow. What can we get? And yesterday, when I went out to find these, the January 2022 360s, were at about 15 delta. And so that gives us about 10 and a half months, 10 months, let's say, to hit the conservative estimate to 360. The 352 is our conservative estimate. So there's pretty good opportunity to get there. And as price continues to head in that direction, we will get premium on the calls. Now, if we're in July and we're trading at 360, our calls are going to be worth a lot more than if we're trading in January and we're trading at 360. If we're in January, we're trading at 398, we're going to have really good opportunity here. So ultimately what I did was I decided to take a look at the different indexes compared to each other, which is what I sent out in the email this weekend, basically the M2 compared to the those indexes and which ones had the most potential. And then I just said, okay, you know, what has changed? And is there a reason to even consider this? And this is kind of how I do the deep out of the monies. You know, we have to be in bull territory. We know that over 70%, or I'm sorry, 90% of the time we're in blended bull market. And, you know, we're not hitting those major extremes, and we didn't hit major extremes. We did back in 2018 where we had flash crash, as you'll notice by the SQN. 2018. So this would have been, Ballpocalypse here. And then the subsequent 2018 meltdown. What we had was a Dow that did act like, you know, it went from 211 to 265. So what, 30%? That, no, 300%? Anyway, big move, not 300%. 30%, fairly big move in bull volatile regime. And that had to spend about, if you look at sideways, how long it spent before it starts breaking out again. It, you know, kind of took about a year and a half or more to really do it. And then COVID happens. And then it's taken almost another year. So 10 months it took 10 months to catch up to what NASDAQ did in 4. So the NASDAQ was certainly the most strong, but so I'm not just gonna go throw a diamond trade, take a Dow trade simply because I've got money and I need to be in something. It's just the conditions lined up, and, you know, I had to start monitoring the price action to find where we would get. So 352 measured move in kind of a, you know, stuff was bad, but it wasn't COVID bad type. You know, we would still be talking about it if this didn't happen. That's still a solid sell-off. And so, you know, this is the biggest measure. I think that we got some good opportunity. So ultimately, there's my logic behind it. Sorry, it took 4 hours to answer you, Ashley. But that's the reason behind that one. And then ags, the DBA trade I got into on Friday. That is the allocation to that is focused on the inflation, but let's have a look here. And also let's have a look at 16 down to 13, 3. So 19 is a price target. The DBAs, we're trading the $20, January 22s, 2022, $20. So, you know, we have to get to here. And if we're talking about inflation coming back, then that's what this type of thing looks like. So if we're trading 20s in, you know, at 35 level, there's a reason I'm in XLE and silver as well. So really strong trend. Had a little bit of a breakout. I was watching the, I've been watching the premiums and just monitoring where we have a good, or where I at least have a good, where I can get those 15 deltas in a good achievable area. So we've got 10 months to hit those, hit the $20 range. And I'm more certain of this sort of move happening. Not there, but you know, you can see it went from 24 to 29. You know, I'm more certain of a move like this happening than I am something else. So that would be, you know, 23 to 36. So this is what I'm expecting in the ags. It's also something I'm expecting in energy and the metals. So hope that answered the question for you, Ashley, and everybody.
It did.
If we're full, okay, cool. Okay.
Thank you.
You got it. If we're fully allocated, where's the money coming from to allocate to Dow? I'm not fully allocated. I guess, okay. I guess, I don't know if you're around. I've increased the chip count on my options. So I opened a TD Ameritrade account and dropped some money in there, and that's where I'm doing it. But as far as the Robinhood, this one, it's still, this one's fully allocated there. Diamond. Yeah. So if we were to just look at the Dow versus the S&P, NASDAQ, like you can see the difference. Just the Dow is just power moving. I mean, it went from 308 to 320 in 3 days. NASDAQ went from the same 3 days, 12,661 to 12, like 100 point or 50 points higher. You know, this almost 10% higher. Yeah, almost a 10% move. And so the way I plan to trade this diamond is continue to allocate to it as I've done with the NASDAQ over the past year. And so we'll be looking for, you know, the best sell setups in the world to fail. And as they fail, we'll be getting long. So we'll be looking for, you know, big down moves. Probably better to cue off the YM, by the way. But this is a great sell setup. I mean, this is very bearish. The world was going to end, and boom, here we are, off to the races. Same. Big. It's just there. It's getting bought. You can really see that it's getting bought. And that's something that hasn't happened. And probably it has something to do with, there's probably good news coming out of the components that have been holding it down, probably like Boeing, I think, is a big one. I don't really pay attention to, holy crap. Oh, geez. Okay. Crap. Wife just sent me a, I'd like for you to reach out to 3 to 5 family members, children, coworkers, friends, and partners who you know intimately. You're going to ask them to reveal 3 aspects of your personality that they find activating, self-sabotaging, or playing the victim. And it's just a long thing that she just sent me to do. Thanks. I should never have given her access. Just kidding. All right. Anything else you guys want to go over before we cut it short? Cut you loose, I should say.
I had a quick question about city. I was reading the rules, and I guess I'm just trying to fully understand the Forex side. So when they're talking about max risk exposure, the 5-to-1 lots. Well, I guess my bigger question was they were saying, hold on, let me pull up I took a screenshot so I could see it. Oh, now I can't find it. But pretty much they were saying your max stop loss per position is 1.5% during evaluation. So pretty much that's just, is that your R that you're risking out of your total amount, or is that just like when you're positioned off of the candle, it can't be more than 1.5%? Is that what they mean?
Yeah. So you can't lose 1.5% of your account balance on one position. If it got stopped out, so let's say you bought euro at whatever, something that's par. you bought something for $100 and your stop was at 98.5. If it went below 98.5, you would have broken the rules.
Okay.
Because 98.5 would be 1.5%. So yes. Now the thing about city is your risk on these trades, I would be looking at 0.25% risk and taking 3 months or so to accomplish the tryout. Because it's going to take, first of all, it requires 30 trading days, right? Which I'm dealing with at the moment. I accomplished it in 15 trading days. Because a trading day, by their definition, is a new trade entered, not closed, but entered. So if you bought today and sold tomorrow, that's one trading day. If you bought today and sold on Friday, that's one trading day. If you bought 5 positions today and you sold on Friday, that's one trading day. So, cool. Yeah. It took me 15 trading days to hit the move, but that's because I got into trend positions that, I'm on month 3, even though it still hasn't been 30 trading days. Is that clear?
Yes.
Okay. And then the other thing is, hold on the way. So the other thing is what you want to do is you want to take it, you want the most, the reason I say take it down to 0.25 or 0.4 or whatever risk is because your job is to get funded. Your job's not, you have it's 17.5 or, whatever, 12.5 or 5K. You're trading with such a small amount before you get funded, so if you graduate from the 70K, you're suddenly trading a $70,000 account. So I'll be trading a $70,000 account probably by the end of the month. And for there, they increase your risk a little bit more. So now you can trade 4.2 lots, whereas the max lot exposure I can have is 0.85. But that's with your trail stop in place. So ultimately, if you're in a position like, for example, so this is my best position currently. I think I got in down here, and I've added and added and added and added, and I've raised my stop each way. If I added here and never raised my stop, if I've added here and here and here, my exposure would be I would be past the point, whatever it was, the 0.65, or 0.85. And in fact, Bob pointed that out for me. I had a pending order, and it would have had me over the point. I would have had 0.88. And he pointed it out, and then we actually had a handful of us, I think Simon was involved, to verify that it's open profits. So if we're trailing stops, we're good. Cool. Loe, does that answer your question, Ashley?
Yep.
Cool. Loe asks, if you get out of evaluation, would you change that 0.25? Well, so I've done the math here. And if I can hit 0.1% per month, which is, I think I should have done it differently because I'm referencing L5 here, which is L5. There we go. So I need to do this whole thing, but it's approximately 18 months to work my way up to a $2 million account. And I mean, this is a little aggressive, but let me see here. Okay, so L5 here. So I know I can hit 0.5% a month on my strategies if I trade at 0.5% risk as opposed to 1% risk or 2% risk. And I can still hit my profit targets, because my main priority over here is to get to the 2 and 3 and 4 and 5, right? I'm not really worried about my monthly payout here. This isn't even, I mean, it gets interesting, eventually. It's pretty nice, but I want to get to the $2 million mark. And as Simon, I believe, whoever, I know some people have spoken to Citi and they're like, no, the cap isn't 2 million. If we can get you to, if we get you to 2 million, you're doing it within a low risk way, you're still going to get more capital for us. Cause they've got a bunch of, like, if you think about it, their job is to put capital to work. And if they can't get it to, if let's say they've got $20 million and they've got 1,000 traders trying out, I'm guessing that at best 10% of the traders that are funded are able to, not even that, I would say probably like 1 to 5% get to the $2 million mark. So the majority of people are going to be down in these areas here, probably in this general area, the first 3 levels, the tryout, the 70, and maybe the 140. Because people are, if you're making $500 a month doing it, you're not really that focused, and it's not going to take a lot of your attention or time, right? But if you can take the next 18 to 24 months, you'll be trading, you can be making 50, 100 grand a month, assuming you continue to ramp that up. And so the handful of people that actually make it down to this level, I'm guessing the people that make it to 2 grand are probably, they're not really, they're squeezing the trigger harder to turn that up to 5 grand. I would guess that most people are squeezing the trigger as hard as they can to turn it into 5,000 a month. So which means that they're not going to make it to $5,000 a month because they're trying so hard to prove to Citi that they're the greatest trader in the world. For Citi, I can confirm a new MT4 account is allocated each time you reach the next PM target. Awesome. So they don't just change the buying power, they give you an entirely new login, is what you're saying, which also is a humble brag by Simon. Congratulations, sir. That it was a humble brag, buddy. You squoze it in there, but congratulations. We definitely got at least one now official Citi trader who's on the other side of the desk. I'll brag for you though. Congratulations. That's awesome. It's a challenge, man. I mean, I would say most people are either you're well-funded, and so, this doesn't matter to you. Maybe $8,000 a month, it starts to matter if you're personally well-funded. But for the most part, the first year of income probably isn't all that meaningful. And so a lot of people they see 2 million and they think that, this coming from somebody who worked at Maverick, we're not impressed by somebody who can take a $17,500 account to, $500,000 in a month. That, believe it or not, I mean, it's impressive and we'll celebrate with you, but that sort of risk you're not going to get a lot of capital, a lot of extra capital. If you can do 17 to 500,000, you probably don't even need our capital, right? You're going to run with it. And that's kind of the catch-22. The ones who could possibly take a $17,000 account to $500,000 in a couple of months don't even really need the money. So, if they're starting out with a 17.5 account, within, a couple months, they're going to be over $1 million. They don't need excess allocation. The people, and honestly, we're not going to, like, if I told you, hey, I just took a $1,000 account or a $500 account to $25,000 in 4 months, you would probably be like, that's pretty good work. I might follow a couple of your trades, but I'm not going to give you my money. Because the volatility is probably pretty high throughout that. And the same thing goes for traders here, like getting to if you can make 2 to 5% a month, you're going to benefit from a $2 million account way more than somebody who can make 100 or 200% a month. Right. And that's kind of the benefit here is, the people there's a lot of people that are probably able to get in, they are capable of getting to these levels, but they blow up down in the early areas because, it took 3 months to make, I'm at 2,500. So 3,000, I'm going to make $1,500. So yeah, about $500 a month is what I'm going to get paid out over here in March. So not really all that exciting. And then it may take me a month or two to get the next level or 3. And so I'm going to, then I'll get paid out another, couple of grand, after 6 months of that, you're really not seeing the needle move, right? It doesn't really look all that exciting. But when you start, this is exponential. This is an actual exponential growth curve. And we have the ability to play, which is really awesome, really rare, that you have the ability to participate in an exponential growth curve. Like, that is incredible that we have this opportunity. It cost me $737 to participate in an exponential growth curve, which, let's say, I don't know, let's say the team here who's doing City or FTMO or whatever, let's say let's just use City. Let's say you stick with it and, you know, you're 4 or 5 years into it. So within the first 2 years, you're already at a $2 million account. If you're hitting the targets on that, theoretically, they're going to give you 3, 4, 5, $10 million. You know, what does the world look like when you're trading a 10 or a $20 million prop account at, and you're still hitting the same numbers, right? So let's just look at what, I don't know, that's easy enough. Equal. $500,000 a month in salary. So $6 million a year. Like, that's that is, if you're willing to you know, make $500 a month, taking your time. And you know what, not to, you know, Grant's also been doing it. And let me talk about somebody who I'm pretty certain is going to be at that $2 million mark, and probably $10 or $20 million mark in the next, you know, 5 or so years. He's taken, I'm guessing, about 6 months, Grant. I don't know how long it's been for you, but it's taken you about 6 months to get to the point where you're almost funded here with City, if I recall. And the reason being, not because Grant is not a good trader, it's just the FX conditions were not good in 2020. There were like 5 FVBO trades. There were a couple of VBO, you know, there's some VBO2s. There, you know, it started to emerge in the second half of the year that things were working, but it was pretty, so it was pretty shaky. And so, I mean, that's not $500 a month then, if it's 6 months to make the $1,500 profit target or whatever. What is that? What, $250 a month type of salary? And so now we have a period where we're going to move pretty good. So Grant's probably going to get his funding, and probably, you know, we'll have a good year and blast off for the next, I don't know, however many years. It could be done, but most likely we're going to have a pretty good blast off for a really sustained move that we're going to be able to take advantage of in Pollinate. And if you've been able to sit through this for 6 months, then as this stuff starts coming up, you're going to have the patience to sit through the real returns, you know. And the reality here is, let's call it 18 months. I would say 18 months, we're probably going to get, all traders are going to be easily up to the $500,000 mark trading. Yeah, absolutely. So if we're sticking to our discipline, we're doing our daily hour of manual back testing to not just discover new ideas and tinker and get new statistics, but also reinforce the model, learn new things, improve your trading. I would say probably within about a year. So next winter, next winter, Northern Hemisphere, we're probably going to have at least half of the traders that try it out are going to be at that $500,000 mark or higher. Assuming you do the daily manual back testing, assuming you do, you trade a strategy, use correct position sizing, you keep your risk low, and we work together to identify what's working, what's not working, and feed each other, I should say. I mean, I have it at August that trading $500,000 account, but I mean, I'm still not, I was more expecting by February to be in the 70, and I need to go back and do my math, but I originally had planned to take 3 months to hit the profit target. And that's actually going to be the case. So I need to turn this model back to the 18. I think I just got aggressive on it. I need to take 18 months to get the model. But by mid-year, by Labor Day, maybe. My wife just outside my window dancing for me. Actually, just more like cheerleading. Yeah, by mid-year, by Labor Day in the United States, by August, September, probably going to have a good chunk of the group at 500,000 in city. I'm guessing that we may even have by next winter. I'm guessing that people like Grant and Simon are probably going to be up at the 2 million area. And no offense to other people, I just am unaware of where you guys are in that. I'm not saying you're not capable of it. It's just those are the people that I'm aware of at the moment. So you find yourself. The reason I bring all that up is, let's say you do hit everything here, and you got to keep telling yourself, because this is what you're going to end up making. This is what your salary would be like if you were making $500 a month right now, but growing exponentially by December. That's a $529,000 salary. I'm sorry. Is that right? E14 times. Oh, okay. That's what you're actually, let me just. That's what your 2 million monthly salary will look like, I think. E14 times 12. This is E14. Yeah. So if you're making 30% or 70%, 80%, actually, I believe, when you get to that level. Yeah, that's $500,000 a year in salary when you get up to the $2 million mark. Let me. Also, this is what you're going to get. This is what you're going to. If you do it in, if you take this 18 month or these 12 months and you make $500 a month for the first couple of months, and then 2,000 after that, and then 4, and then 8 and 16, you're going to take home $145,000 this year. For a $145,000 job, $145,000 annual salary, how much work would you typically expect to take out of your time? $150,000 a year job is probably on average 40 to 60 hours a week in a 60 to 80, Dan says, in a pretty intense environment. I'm guessing that a lot of people that are making 150 as an employee is what I want to, what I want to talk about here is as an employee, not as a founder, entrepreneur, or, average person, or employee, like you go out and, you go out and you're earning, 150 is kind of like table stakes in the Bay Area in California when you're talking about like an engineer or a designer, UX, anything like that. 150 is like starting salary. You've been in the game for 4 or 5 years, you're probably making 250, 300, 500,000. But that's also, you're making, you're definitely not working 20-hour weeks. You're not working 40-hour weeks. My wife as a litigator working like 80 or 90 hour weeks was based at about 150 and bonused, I think at like probably 175, I think is her best year. And let me see, like, and that's after 7 to 8 years of school, assuming you pass the bar your first go around, and you if you pass the bar, you're pretty much getting hired. So you do all that to make 150,000 base salary, and then you spend 90 hours a week working until hoping that you can survive till age 51 without a heart attack, so that then you can eventually end up on board seats and do it. Now that's a route. You get 4 or 5 board seats, you're making $1 million, $1.5 million doing that job. There's an opportunity there, but let me see. But yeah, $150,000 a year jobs are not they're not a dime a dozen. And I'm granted I'm in finance and tech and things, so prices are a little bit different, but margins are different. But yeah, $150,000 a year, even on any of the jobs that I've ever had where I was earning 150 or 250 anywhere, yeah, they're pretty intense. So with this job, you make all your money at the end, which is great, right? As long as you take control of yourself, as long as you, and the thing is usually if you got $150,000 a year job, you're probably managing people too. You're managing up and managing down. You could be fired at any moment. You could be, the company could go bankrupt. They could realize that there's too many of your where diversity and inclusion, you're skewing the DNIs too far, so we need to cut 20% of the staff. And so you're at huge risk, and the company is leveraging you. So if you're getting paid $145,000 a year, they're at least earning 200,000 off of you, if not 300,000. There's no reason to pay salaries just to pay salaries. If there's no return on the investment, then obviously you wouldn't make that investment as a business owner. Even if this takes 18 months to get to the $145,000, it's still pretty decent. And let's hours. So I'm going to call it 30 hours. I know it's 360, but let's just F3, F14. So those are the hours equals 145,000 divided by. So you're making $404 an hour if you spend 1 hour a day every single day, minus 5. You can take 5 days off out of the year. I guess I should have put that as 5, but let's say you spend 30, which is 1 hour a day. I'm not saying it also only takes up to 15 minutes to execute the trade. So it could be 1 hour and 15 minutes. But you can definitely fit in your trade analysis and 20 to 30 trade back tests per day practicing. So you're making about $400 an hour, which if how many hours is 40. It's like 2080. Okay. So that's so if you worked a 40-hour work week, you would be making $70 an hour. If you did just 1 hour a day instead, you would be making $400 an hour. So 5.5x the return on investment. And then when you get to your $2 million account, you'll be making $1,470 an hour. Remember, you still have to do your hour a day. That's table stakes for this job. You're hired at $400 an hour until you get to and that's your apprentice phase. You get paid $150,000 a year in 1 year, maybe 18 months to be an apprentice. And then after you get to that $2 million mark, you're a journeyman and you triple 3.5 times your salary by that time. And then, this can still, you could be making on a $10 million account, you're making $500,000 a month. So let's look at 6 million. I might have not had enough zeros. Oh, I did. Oh, okay. If you get yourself up to like a $10 million account, you'll be earning $16,000 an hour. All right, let me see what you guys wrote here. 60 to 80 hour work week, no life, depends on hourly wage. I know people putting minimum 60 for that in New York. Yep. 150 has an employee, usually as an employee is very little time freedom. Those are especially a very small percent. They get maybe 1% real day. Yeah, they get maybe 1% real day off per week. Probably. Yeah. But you're definitely checking messages and doing deals for 89 hours a week. She was working double a normal work week. Yeah. So you're right. She was earning $75,000, right? $75,000. Or I'm sorry, that would have been $35 an hour. Yeah. She was actually earning $35 an hour. Isn't that crazy? $35 an hour for $150,000 a year, or $400 an hour for the exact same. And you have no boss who needs to see your degree. You have no gatekeeper HR person who has this weird formula about founder or whatever the company, is like our culture is just, we don't trust women. You're going to have a baby and you're going to be out of the game forever, or, for at least 6 months. And, while we could pay a guy the exact same and not have to worry about that, right? There's those things you have to deal with. You don't speak the language fluently. So you can't work here with us because you need to be fluent in English, Spanish, Japanese, Thai, whatever, that's not even an issue. We only hire people over 5'7" and under 6'2". We only hire people that weigh 150 to 187 pounds. We only hire, and as an individual, like if you're not a public company and, I can hire who I want, who I think's the best person. I can definitely hire. That's exactly what you want to do, especially in a smaller business where, every dollar counts. Every business, that's the case. But it's such a, there's no gatekeepers. You don't need to go to the Naval Academy. You don't need to have a degree. You don't need to have gone to Harvard. You don't need to have learned a second or third language. You don't need to wear the right color of skin or wear the right gender or, you know, whatever. There's nothing in your way in this job other than spending an hour a day practicing. So 30 hours a month practicing, and you got yourself $150,000 a year. First year out of the gate. First year out of the gate, you're making 150 with, or even better. First year out of the gate, you're making $400 an hour. Ultimately, the 150 makes sense. Once you're there, you know, you're making $1,400 an hour. Let's see, 80, and she was doing double work. Yeah, so rough. Chris, the most valuable thing you taught this room was concept of leverage outside of the trading material. Well, thank you for throwing the trading material on there. Chase, how I thought about everything in terms of value of time spent. Yeah, totally. And so I have 3 businesses that I'm actually looking at buying at the moment. And the only reason I'm interested in them is because they are definitely second and third type of leverage. To go over that real quick, remember the first type of leverage is you hire an employee to do your job. So, and job expectations change from year to year, right? So first type of leverage is, okay, I'm going to open up a t-shirt shop. T-shirt shop is going to be, you know, make me $5,000 a month. So I need to, well, let's say $10,000 a month. I'm going to do that. But that means I have to spend, you know, 60 to 80 hours a week in there. And, you know, it's kind of limited and whatever. So I'm going to hire somebody. So you hire somebody at $25,000 or $3,000 a month and you earn $10,000. You made $7,000 on it, right? That's the first type of leverage. That's nice, but it's not that great. The second type of leverage is that you, financial leverage, right? You know, you buy, you invest in a company and you continue to live your life and do your thing, and the company's value, like you buy a stock, like you buy the diamonds. You go out and you buy these deep out of the money calls on the diamonds, and you continue doing your life, and you know that money's out there growing for you and doing good. That's the second type of leverage, and that's far superior to the first type of leverage, because instead of taking that $10,000, or instead of taking however much money you would need to put up to get a storefront, inventory, staff, insurance, all the other stuff, you just take that money and invest it and can make theoretically $10,000 or $7,000 a month, but with different risks. And then the third is that, you know, you can create like a movie. You do the movie once and you get it on Netflix streaming and you get royalties for life. You only had to build it once. So the idea of the third type of leverage is that you build something once and that you get it forever. So what we're doing here is we're dealing with second and potentially third types of leverage here. One of the biggest benefits here is that we're using someone else's money. And all we have to do is be hardworking and diligent. And when I say hardworking, I mean an hour a day. You have to spend 1 hour a day for a $150,000 a year job or a $500,000 a year salary. It costs you an hour. And you know what? I could even cut it down to just 5 days a week. So, you know, let's just turn this into 20. So Monday through Friday, no weekends. You move yourself up to, let me just make sure these are all the same. There we go. I know I got some comments I'll get to here, but so if you do just Monday through Friday, I'm not even saying you need to do Saturdays and Sundays. So just 5 days a week, Monday through Friday, you increase your hourly rate by 25%. And then by the time you're actually earning or trading the $2 million account, you're making $2,200 an hour. $2,200 an hour. I mean, that with those sort of numbers, you can be like, maybe I'll only trade, only do 4 days of work this week. So you go from 80 hours a week taking this to 5 hours a week. You're still taking that. It's just going to take you, 12 to 18 months to work your way into it. Okay. Changed how I thought about everything in terms of value of time spent. Good. Glad to hear it, Dan. Ashley, the fact that I can trade end of day and not worry about starting a family. Absolutely, Ashley. As I know we have a number of new dads and new families in the house here, myself included, and some aspiring families. I can only imagine your families saying, hey, so when are you having them? Because that's how my family, well, her family.
Oh, yeah, they're dropping hints.
Yeah.
All the time.
All the time. It's quite the adventure. But, you get the work in now so that when you're, 9 months and or recovering, you have that solid foundation and you can come back and put yourself on maternity leave for as long as you want. And then all you have to do is go right back to work, which is 20 hours a month, 4 hours a week, 1 hour a day, Monday through Thursday. And job expectations change from year to year. Yeah, they absolutely do. If I'm hiring somebody and all of a sudden COVID happened, yep, there you go. For example, or Loe, in your neighborhood, there's things that like Iran bombed facilities over there. Things can change in overnight. We had quite the year. Oil prices made employers crazy. Yeah. You've got another country bombing your oil refineries. You have the largest oil refiner in the world, and prices went negative. Geez. In addition to COVID, there's a lot going on in your world, buddy. I definitely can empathize there. Labor, financial software. Yep. Understanding those types of leverage explains the end financial result for so many people. The misconception is if just work harder, labor, you will do better. It is absolutely the misconception. And we literally have this gift right in front of us, this freebie just sitting here. We've got, let me think about it. So, for those that choose to do it, I'm not saying you have to do the prop tryout or whatever, but for those that do it, you're pretty much getting, I'm giving you the recipe to earn $25,000 per hour. Whatever, let's assume that you were making, yep. Spend time learning about nonlinear equations. This is exactly exponential. This is exactly exponential growth, and it's there. And most people think in linear equations. Exactly. If you're making $150,000 a year as an employee, I'm assuming most of the people in this room are not facing this specific scenario, because you've heard me go on and on and on and on and on about this stuff before. But you've spent the time. Let's say you're earning 150 a year as an employee, 60 hours a week. exchanging, what do we call that? $70 an hour. They're earning $70 an hour, anywhere from $35 to $70 an hour is what they're earning. And what is on their mind is proving to their bosses and customers and coworkers that they are worthy of a 3% cost of living raise is normal, right? But they're hoping that they prove the potential that they're going to make 10%, a 10% raise. So what's 10%, 114, so 160. So they're going to make $160,000. That's their goal. That's like best. Usually, I mean, in other places you got bonuses and other thing else, but you go from $70 to $76 an hour, right? 7% makes 150 a year, right? Like it's and you're fighting, like you're hoping that your boss and their boss, and then the committee that approves these, and then the fact that they have profit and the fact that they have all that available, you're hoping that they're going to give you the sign off and say, yep, you're worth $150,000 this year, not 145, you're worth 150. And so you go from 70 to 70, whatever, $3 an hour. Or you spend 1 hour a day, 4 days a week, 1 hour a day, 4 days a week. Well, 5 days, I think is what I did. So 5 days a week, 1 hour a day, doing your practice, manually back testing, building out your models, doing your work. I guarantee that 99% of people in the markets that we run circles around haven't done a single manual back test, let alone an hour a day. And they're wondering why they're not making, $607 an hour, $2,200 an hour, $25,000 an hour. They're wondering why they're not doing it. But they're going to fire up, their trading account and whatever, Thinkorswim or, whatever, they're going to fire that up. And somehow that by not doing any practice and not doing any work, they're going to somehow be making that $2,200 an hour or that $600 an hour for their efforts. And oh, by the way, how many hours are they going to be staring at their screens, reading research reports, watching CNBC to the right, Bloomberg to the left, Twitter streaming in front of them, and a dozen monitors and all those other things, wondering why they're not even making $70 an hour, right? They're not even doing what the people who are, I can almost guarantee that trader that I'm talking about right there is probably not making $145,000. They probably wouldn't even be making $145,000 a year in a job. If you're thinking to yourself like, yeah, I'm going to give up trading and I'm going to give up trading and $150,000. I'm going to give up my $150,000 a year salary and I'm going to trade full time. They're thinking that they're going to spend more time reading research, looking at charts, paying for, new algorithms or fancy indicators or the secret, double secret probation research report that they're only going to get from Goldman or B of A, Merrill, all those other things. Instead of spending an hour a day, 1 hour a day to make, you give me 1 hour a day of practicing, you fire up your Citi account and you get to work and you suffer through making $500 a month for the first 3 months and get yourself up to a couple grand a month for the next few months. And then you use exponentials as opposed to linear math. And you get yourself up to making 44 grand a month. And then you continue to prove that you do that. Let's say it takes 18 months, not the 12 months. You continue to do that. And, just at that right there, you're making $500,000 a year at that point on 20 hours a week, 30 hours a week. I'm sorry, a month. That's just 1 hour, one freaking hour a day. 75 times 2,000 hours equals 150. But as we said, those aren't 40-hour per week jobs. Yeah. I mean, some people are, but yeah, you're right. For the most part, they're more like 60 and 80. So you're looking more at like $35, $40 hour jobs, which makes the first type of leverage nice because you're paying for a 40-hour, you're paying for 40 hours and you're getting 80 hours. So there is that. Also play the net worth game, not the net income game, for sure. Income becomes expenses, net worth compounds and can be leveraged. Absolutely. Absolutely, Grant. Yep. I mean, and think about this, like once you get, I think it's 100,000, it might be 250,000. But once you're over that dollar amount, the broker or, Chase private client or whoever, they'll give you margin. They give you can borrow against your assets. So here's the game, right? You spend an hour a day, 5 days a week, Monday through Friday, take your weekends off. Just be in front of the screen at the end of day when you need to do your charts. Make sure you update your trades and keep excellent records. You're always on your spreadsheets. And then you do the thing, you get yourself up to, where you need to be. It may take 6 months, may take 12 months, but as long as you're sticking with the plan and you're we're working together on this and we're not just kind of like YOLOing in on things, you get yourself up to, get your expenses down and get this money going. Now you're making, within 12 to 18 months, you're up to 44 grand a month, right? Couple of months, maybe, you're in a position to where you've got enough money saved, as long as you don't ramp up, as long as you can keep your burn at, I don't know, whatever, like 5 grand a month, 3 grand a month, depending on where you are in life, 20 grand a month, depending on what you have going, like whatever. As long as you keep your burn below what you're pulling in, that's what you want. And then you take that extra and you dump it into you go into a Chase, or you can do this on, I think IB has it. But you dump that money into well, I'm not going to get too far into it, but you can structure it so that it's a company. You have a C corp, depending on what country you're in, or an LLC or whatever, so that it's corporate income, not personal income. And then you have the bank account with that, and then you get margin or a loan, and say you want to buy a house, instead of coming up with 20% down to buy a house. I'm sorry for you international folks. I know some of these things are a little, they don't translate one-to-one, but in the United States, you can do this, instead of taking, let's say, $1 million house, you got to come up with $200,000. Most people figure out ways to come up with $200,000. But let's say you had an account where you saved up, and you keep dumping it in every month. It's in the S&P, it's in the NASDAQ, it's in the Dow, it's in Russell, it's in gold, it's in TLT, whatever. It's a nice bulletproof, boring, all-weather portfolio or whatever. I'm not going to get into portfolios, but just a simple portfolio. And it's managed by a company that will give you a loan against your own stuff. So now you got yourself $500,000, $1 million. It works out. Now you want to go buy a house. A lot of people would be tempted to sell everything and go buy the house with that $1 million, right? Well, instead, what you can do is write yourself a loan for the $200,000, put that down as your down payment. And then you're taking which is about, I think, 5 grand a month is $1 million. I don't know what the 30-year mortgage would be on $1 million, but let's say it's 5 grand a month. So instead of dropping, let's say, whatever, you're repaying that back to it. And now you're 5-to-1 levered on the house, as opposed to 1-to-1 levered, which would be paying cash. So many people are so excited to pay off their home and not have to have a payment, but you know, the poor people are cash. What's the term? Cash heavy. Wealthy people are cash light. So you don't really have money in cash. You have it in cash heavy, asset poor. Yeah, you have it in assets that you can lever, that you can borrow against. House rich, cash poor too. Same. Yep. And ideally what you want is you want to be in a position of, okay, now we're making $500,000 a year. Now remember, they're gonna up your chip count. If you've taken your time to get to the $2 million mark, and we've already confirmed this, they're gonna keep adding to it. So, you know, that's $6 million a year. Where did I come up with this number? It's $529,000 a year there. You know, and then we got to, sorry, I had $10 million account. $10 million accounts paying you $6 million a year. So with $6 million, you're taking it to, right? You're doing a lot of things that you can't do. And the way to do it is not working harder by all. You want to use your second and third types of leverage. You want to spend an hour a day rewiring your mind, programming that brain, collecting those statistics, getting the strategies dialed in. You know, when you can go to your spreadsheets and say, I am on that spreadsheet. I can go to my spreadsheet and say, okay, we're in, I know that we're in bull quiet 29% of the time, neutral 27, neutral quiet 19, bear quiet. I know the distribution. I know the distribution of my currencies. Let me go to my main thing. What's the distribution of, you know, where are we spending our time? It's equally distributed. This is a bell curve on currencies. So we're going to have periods where we're in neutral, bull quiet, bull volatile. We're going to have where we're in neutral, bear quiet, bear volatile. And it's going to be evenly distributed over the course of 20, 25, 30, 40, 50 years. It's going to be evenly distributed. But what we're going to know is that we've got this dialed in. Okay. Then we got ourselves the failed vol breakout on table. Let's say we have a failed vol breakout on gold, for example. Well, let's stick with currencies. So failed vol breakout on the Euro USD. Okay, cool. Let's go look at our Euro USD. I got 32 trades in the last 4 years. It has a 59% win rate, but has made almost 18 R. I've got 32 trades, and it has a 4.2 SQN. So I'm interested in this. Now, there's one last piece of information. Just because we have a failed vol breakout or a failed breakout on the Euro doesn't mean we take it, because it only has a 33% win rate in a bull quiet. We get our stats here. And this is why when we spend that hour a day collecting our stats, we can put that stuff into, we have all this information. So we know if we're going to take that trade. Bull volatile, it worked one time. We made 0.25 R out of it. So that doesn't seem like a good one, but you know, statistically, now we're getting better. Sideways quiet, 40% win rate. You know, it's worth it because we've made 2R, but it's still questionable. Now, if we're in a volatile, sideways volatile, that has a 5 SQN. It's made 12 out of 17 R in it with a 65% win rate. Okay, so I'm going to go look at the Euro USD again and make a decision. And am I going to take the failed vol breakout on Euro USD? Well, if it's in neutral or sideways volatile, I will. If it's in sideways quiet, potentially. If it's in bull quiet, no. If it's in bull volatile, it's still a little risky. Sorry. But I have this data. You know, I have bear volatile has a 75% win rate, 6.7. So basically, in neutral, sideways volatile, in sideways volatile and in bear volatile, we're going to have the best setups in Euro USD. So once you've spent your your hour a day for, the rest of your life, you're earning that salary. And in addition, all you really have to do is you need to go and buy, or you just need to do that 1 hour. You collect that data, and then you don't even really have to guess. It's a complete algorithm. What is the trade? Well, it's a failed vol breakout on the Euro USD in a sideways volatile regime. Awesome. I'm long that thing, or short, whatever the direction is. I'm taking that trade, right? And then you can also slice and dice these trades. Which ones were, in addition to that, are longs in sideways volatile good, or are shorts? What is the average? What's my max favorable excursion in a sideways volatile versus a sideways quiet? All those other things, you just collecting. It seems hard now, but your job is to continue to collect and practice over and over and over and over a day, 1 hour a day. That's all it takes. All right. 900,000 finance, 30 years at 3.5% equals 4. Okay. So 1 million is about 4,500. Okay, cool. Yeah. So ballpark. I don't know where you live. $1 million homes are everywhere here in Arizona these days. But they're big. You go to California, $1 million homes are everywhere and they're tiny. But all available, totally doable. And then the other thing, like, is there any other way? You're always going to want to be asking these questions. Is there any other way that I can use the second or third, ideally third type of leverage to earn the same $2,200 an hour? Is there another way that you can do that? And you're always going to be comparing, or you should always be comparing that there. Now that your first year, you're earning $607 an hour, maybe 18 months. So maybe even less, but everything you do, is it going to be worth $600 or not? Now, the thing is after a few years, maybe you just get to 10 hours and this multiple really keeps increasing. I don't know. It's, it is what it is, but you just want to be looking at that. Always have that, that if you're doing the city tryout and you're sticking to your game plan and you're following the swing position trades, we're doing the end of days only, we're sticking to the high base or the VBOs or the failed vol breakouts or VBO2s, we're sticking to what's doing, we're collaborating with each other. So, hey, Chris, why would you have like yesterday, why would I have done the Euro Franc? It's worthless on FVBO, it is, but on high base in a trend, it's lights out, even though it's going against me right now. I just know that the metrics are there. So post your trades in there, post your screenshots, ask your questions. And what we want to do is we want to keep each other on that path, right? We want to keep each other focused. I'll do a quick one on that, Grant. We want to keep you focused on the game plan. Remember, it's $150,000 a year job that you have at your disposal. And also, as Grant just pointed out, they're doing another system build. So this is just talking about city. You can do FTMO and day trade the NASDAQ. You can do Top Step Trader and day trade the futures or whatever currencies. You can do pretty much anything. So if you, I would suggest to do this system build with Grant and Kyle, because you guys are going to build a new system, a whole new system. You're going to learn how to do it from scratch. Other people are going to be working on it at the same time. So they're going to have insights. A lot of the stuff I've got was from other people, giving me the, hey, this is something I discovered here. In fact, I think it was Grant that showed me any failed breakout in a neutral regime is better than just failed vol breakouts. So in a neutral, you want to get a little bit more. All right, let me see here. So remember what you're looking for. You're looking for, you're getting paid $145,000 a year. It's going to come exponentially. You're going to teach yourself how exponentials work, and you're going to reinforce how exponentials work. So you're going to start looking at, okay, what's the exponential benefit of this hourly task? Is there an exponential benefit? Nope. Okay. Health is an exponential benefit. Sleep is an exponential. I'm not benefit, but the results are exponential. Like learning something from first principle, like learning law, I think is an exponential, because you just open up so much logic that we kind of go through life not knowing. Physics, I think, is an exponential. A happy family, a happy home, that's an exponential, right? Because you're gonna be able to, if you're stressed, you're not even gonna be able to hit the $600 an hour, let alone the $2,200 an hour mark, because you're worried too many other things. All right, guys. You're learning how to grow food. Awesome. That's an exponential. Yes. Maybe. Depending on how many hours you put in to harvest the food, I suppose, right? But if you can put in an hour and get, a month's worth of food, that's definitely an exponential. But there's peace and Zen behind it too, right? Cool, guys. I think that's it. Any other questions? Anything you guys want to cover before we cut it loose? Dot looking good. KSM obviously going to start looking good. Adam, all right. My guess is the staked tokens are going to start moving. So those of you on any of the platforms that have staking, I think they're probably going to start moving. So that's what I'm after. All right. Stop. There we go. All right, guys. I can cover a little more about system build. Yeah, I think everybody just popped off though, Grant. If it's still recording, but I think most people are gone, or we can just cover it tomorrow.
Yeah, we could cover it tomorrow. It's no problem. Let them sign up, and then we'll talk about it tomorrow in chat.
Sounds good.
Cool.
All right, guys. Better to ask people to join early or stay after. We'll just do it during the regular thing, the way. All right, guys. Bye.